Good morning, Connie. How are you today?
Good morning, Jerry. Great to see you. So happy to be back in the saddle and recording again with you today. How are you? What's going on?
Likewise. Been a busy week with the Thanksgiving holiday and being a new grandfather. Delivered My son delivered a baby girl yesterday, Hope Alice, 1 o'clock. It's been a pretty exciting couple days.
Oh, congratulations, Jerry. That is such a joy. I am so happy for you and your family. Congratulations.
Thank you. Very, very exciting times. Um,
Yes.
I'd like to also welcome our guests today. Today we have our fourth installment on long-term care planning. Connie and I have developed a series on Roadmap to Retirement 2.0. This is the fourth one. We've done an introduction, a life care planning video, and an estate planning video. A little bit of ourselves. Connie is an elder law consultant. You want to tell us about your firm, Connie?
Sure. I am a partner with the law firm of Mickey Wilson Weiler, Renzi, Lenert and Julien, and the Elder Law Center. And I'm a co-manager along with my partner, Katie Leonard, of the Elder Law Center division of our law firm. We're located in Sugar Grove, Illinois, and we help clients with estate planning, long-term care planning, life care planning, guardianship, special needs. And it's just exciting to be here with you with our reboot of our live series and now taking it into the virtual reality Roadmap to Retirement 2.0. And Jerry, I'll push it back to you. Give a little background about who you are and where you come from.
Sure. Well, I'm a principal at the Konen Insurance agency here in Aurora. Getting close to celebrating our 60th year. We do consulting work for clients with business, employee benefits, and personal insurance situations, and have a passion for helping our client base. Today, we will be talking about long-term care planning, Connie. And I guess when we start looking at that, what is long-term care? What is long-term care planning, and is it necessary?
Great question. Good starting point. Long-term care planning is something we hope is never necessary, right? I may have talked in our previous series, and if I haven't, I will share now. I bought a crystal ball, cannot make it work. Until I do, I think that's one of those things that, yes, long-term care planning is a good idea for everyone to keep on their radar and to engage in sooner than later. And it's what it is it's planning for the potential that you might, as you age, you might have care needs that necessitate having help anywhere from in-home to assisted living to nursing home care. So again, we hope we never need it, but that's the range. And when I meet with clients, it's very clear we want to do all we can to avoid the nursing home, but the reality is, and the statistics bear that on a percentage wise, there are many of us who will have some need to spend some time in a nursing home. So the sooner we can plan for it in the vernacular of long-term care planning, probably the better. And
Yeah,
that's what it means in my world. So in your world, Jerry?
the practical matter, it's like mortality is going to affect 100% of us, all of us. And I don't know if we necessarily look at the numbers as it relates to our potential for stay in a long-term care facility, and it's about 2/3. We like to think that that's not really going to happen to any of us. No one wants to think about it. But if we think about our loved ones, aunts, uncles, moms, dads, that sort of thing, all of a sudden we start to paint a picture that a lot of people will use a facility from anywhere of a couple days to a couple months to a couple years. And being prepared for that is critical to avoid financial ruin.
Right, exactly.
Connie, when do you think is the optimal time to plan for long-term care? When in someone's lifespan?
Again, another excellent question. In the ideal world, I think you'll start to plan for it sooner than later. When again, in our previous series, I talk about, once you become an adult, 18 years or older, you want to work on a plan for in the event you become unable to make your own decisions with your powers of attorney, right? And that's a previous video. But long-term care planning, 18-year-olds probably not going to do it. But as you start to, reach that kind of what we call middle age, it's a good time to start to put it on your radar just to explore, I think, with your professional like yourself, Jerry, what are long-term care insurance options? Is there something that I can add to my portfolio that would give this extra pot if I ever needed long-term care? And I think, and I don't want to talk for you, that kind of window to explore that, has some shelf life to it, because you have to be insurable. And as you age, it becomes way more expensive. So to pull that in, I think you want to do that, kind of sooner than later. But the reality of it is, if you are at your roadmap stop of, okay, now I'm on the precipice of retirement, I'm in that late 50s to early 60s, you definitely want to have it on your radar. How aggressive you are will be dependent upon your wishes and your philosophy and what your estate looks like and what your health looks like. But you definitely, at that point, you really want it on your radar. And a little bit later, we'll talk about what if you haven't. But, I'm going to kind of push it back to you, Jerry, to talk about, what do you see? Like, if somebody does want to add long-term care insurance to their toolkit, some additional option there, what is your recommendation? What do you see? And what do you think should be included in that?
The industry is starting to open their eyes to this issue and starting to do the planning a little bit earlier. One of the big hurdles has been insurability, as you mentioned before. And with any problem, if you wait too long, there's not enough time value of money to make a solution. So with the advent of purchase options for long-term care now becoming available with some of our carriers, you can start as young as 21. I don't think a 21-year-old is necessarily going to see the value in this, but the purchase price point is very, very low on that product. 40s to 55, I think, is the sweet spot. Once you get past that, again, the diminished timeline doesn't create enough of a time value of money equation, solution. So it becomes very expensive as you go past that, excuse me. First and foremost, I think you have to be in a position to have a want for protecting your financial assets. And that's its own conversation as well. Having something to lose is my point there.
Sure.
So there's no one pat answer there, but sooner is better, I guess, is a summary.
Okay. And you brought to mind two things that I think also come into the equation. It also, I think it does have a broad spectrum, as it is another way to add a pot to get that quality care, because that's the other piece of it too. Not only is it protecting what you have and protecting assets, but it also can be a vehicle to ensure that you got quality care if you need it. And that,
Right.
Is also important. And then, following up, I'd love to hear from you, following up on, if you're kind of past that sweet spot, but maybe you've had life insurance and now you're on the edge of retirement, this roadmap, here you go, and they're meeting with you. Are there vehicles and options for maybe converting some of that life insurance to have a long-term care component?
The application for the new contract is what the wild card is. And as we age and stuff like that, the litmus test is a little bit tougher. But they are out there, and hybrid contracts and stuff like that take away and maybe remove some of the life component and provide more of a long-term care benefit.
Okay.
So there's a give and take there. And, you have to kind of look at that to see if it's desirable, but that certainly is an option. That kind of brings up the point, Connie. There are a lot of resources available for long-term care. What do you see as some of the best resources people have for taking care of this issue?
Okay, a good jumping point here, because I think one of the things that we want to make sure our viewers are aware of is that there's also some expectation under the laws as we look at how and when other alternatives to our personal resources might be available. So from the standpoint of, if I need long-term care, there is an expectation before I'm able to apply for any sort of public assistance, at the other end of the spectrum, there is an expectation that I will use my private resources. And so we've got private resources. If we do have some sort of long-term care insurance policy or some sort of hybrid policy, we would tap into that. And then after that, it's really, okay, if my resources are exhausted, would I be eligible to apply for Medicaid, which is a needs-based assistance? And those rules in that world, there's very complex rules, and the rules can be harsh and unforgiving if you've given away assets to try to qualify and such. So that is something that it really does require getting advice sooner than later. And then we've got this asterisk here. Where does Medicare and Medicare supplements fit in? And the main takeaway for this video is I want attendees to know that, yeah, you might trigger some Medicare coverage. And if you have a good supplement, some supplemental coverage there, but it is a very short window. It is a very, very short window in the world of long-term care. And not only is it a short window, is you have to have a qualifying hospital stay of 3 days or more. And there's all these complicated rules related to that, even to trigger that benefit.
Yeah.
So if you have a client, Jerry, or I have a client, or ourselves, and we're going from our house to a nursing home, we're not going to ever trigger any Medicare from a house
Right.
to a nursing home. And then again, the final step is utilizing and applying for Medicaid, but those rules are strict, and there's look back periods, and that could be a 2-hour video, and that's not what we have time for today. So what is your take on the
pretty much the same, personal resources, different insurance programs, tax credits for long-term care. The confusion around Medicare is enormous. Everyone thinks they've got long-term care coverage with that, and
Right.
I'm not sure where that is that miscommunication comes from, but
I think it's because there is some limited coverage for a rehab stay, but there's a checklist, and every item on that checklist has to be met to trigger that benefit. And then that benefit, if you trigger that full benefit, which many people won't, but if you do, then Medicare will only pay in full up to the first 20 days. And then at days 21 through 100, there's a co-payment. And then if people have worked with you and got a good Medicare supplement, that supplement may help with the copay days.
Yeah.
But, I think that's where the confusion comes in. Plus the names Medicare, Medicaid they sound so similar.
They are similar.
Yeah.
I'll comment on the Medicare. It's for skilled care only, and the statistical stay is max is like 7 days in skilled care. I mean, that's just an average number there.
Sure.
So most of the time it does not kick in. For that very reason alone, it won't provide for intermediate or custodial care. So it's kind of an odd one, but a stretch nonetheless. Well, those are a lot of different things that you can hone in on to help solve that problem. And certainly with proper consult with you or I, we could help out with that. One of the things that comes up often is we get the question, what do we do if you don't have a plan? And are you out of luck, Connie? Are there steps that can be taken?
That is something that we want to really emphasize, Jerry, I think, is if you have not made a plan and crisis happens, get with your team of professional advisors, meet with an elder law attorney or an attorney knowledgeable about long-term care planning, meet with your financial and your insurance advisors, and find out what their options are. But from my side of things, from the legal side of things, and understanding like Medicaid and future eligibility for that, there are things that are available in crisis planning. And there are, what I want attendees to take away is, if you can start to understand those rules and make a plan sooner than later, all the better. But if a crisis happens and you haven't, please get advice, because if you're married, there are definitely special protections for community spouses, the spouse that's healthy and going to be able to still live at home. If you have a caretaker child that has lived with you and provided care, if you have a disabled child, there may be planning through there. There are avenues to help you achieve a quality of life and not jeopardize your ability to apply for Medicaid and to be determined eligible if you get that proper advice, so that you know the rules, what you can do, what you can't do. So if you haven't made a plan and crisis happens, please, please, please get advice, because there are things that still can be done in crisis planning.
That's good to know. I mean, from our perspective, it's like without a plan, nothing will happen. So it's good to know that there are some stopgaps that can be deployed if crisis befalls you.
Absolutely. Absolutely. I just think it's, this is an important topic for our listeners, and hopefully, you'll put this on your radar sooner than later and incorporate it into your planning. And if you are watching this and you are right at the edge of retirement, you'll really spring into action on this type of planning.
Definitely. A call to action if I've ever heard one. Well, we'd like to thank everyone for listening to us today, and hopefully we've provoked a few thoughts, and hopefully we'll provoke a few actions. Please check us out on our other videos, as we mentioned, the Intro to Roadmap to Retirement, estate planning, and life care planning. And certainly feel free to reach out to Connie or I for any individual consults as needed. Until next time, have a great one.
Yes. Until next time, everyone, take care, be safe, be happy. Take care. Bye-bye.